You have built a great product. You are eyeing US investors. And everyone tells you, just go to Stripe Atlas and open a Delaware C-Corp. But here is the reality. If you are an Indian resident and you do this without understanding ODI rules, you are not building a startup. You are building a legal time bomb with the RBI. Hi everyone, I am Ayush from Just Start. Today I am going to show you the standard LLP model. This is the compliance first way Indian founders are now incorporating in the US to stay 100% FEMA compliant while remaining VC ready. Let's start with what is the LLP to C-Corp model. Instead of you as an individual owning the US company directly through your bank account, we set up an Indian LLP first. This LLP then acts as the promoter or parent company that invests in the Delaware C-Corp. Now you must be thinking, why do we do this? Because under the 2022 Overseas Investment Rules, an Indian entity like your LLP has much clearer pathways to invest in a bona fide business abroad than an individual does. It separates your personal wealth from the business investment and satisfies the RBI that this is a corporate expansion, not just a way to move personal cash out of India. There are three massive advantages to this model. The first one is ODI compliance, which is the gold standard. When an LLP invests, we file Form FC with your authorized dealer, that is AD Bank. You get a UIN, that is Unique Identification Number. This is your green card for the investment. Everything is on record, meaning no FEMA notices later. The second one being tax efficiency. Unlike a private limited company, an LLP is a pass-through entity in India for certain purposes. It helps avoid the triple taxation. And the third one being the VC readiness. When a US investors look at your cap table, they see a clean corporate structure. If they want to do a flip later, having an LLP as the shareholder makes the legal paperwork significantly smoother than having 50 individuals, Indian resident as shareholders. Now let's talk about some of the disadvantages. Now you know that it's not all sunshine. You need to be aware of the cons to avoid the miscompliance. The number one being the higher setup cost. You are maintaining two entities. You have to do filings for the Indian LLP, which is GST, income tax, ROC, etc. and the US C-Corp, which is franchisee tax, federal tax and beneficial owner reporting. The second being the round-tripping cost. You must ensure the US C-Corp does not just invest the money back into India in a way that violates the two-layer rule. And the third one being the annual compliance. You must file an APR, which is annual performance report, every year with the RBI through your bank. If you miss this, your UIN can be suspended. If you are ready to do this, here is the 4 steps checklist we use at Just Start. The number one being incorporate the Indian LLP. Ensure the partnership deed specifically allows for investment in overseas subsidiaries. The step 2 is incorporate the Delaware C-Corp. Appoint a registered agent and get your EIN, that is Employment Identification Number. And the third one being the AD Bank setup. This is where most founders fail. You must present your US incorporation documents to your Indian bank to file Form FC. Do not send a single dollar to the US until you have your UI. And the next step being issue shares. The Delaware C-Corp issues share directly to the Indian LLP. Incorporating in the US is a strategic move, but doing it in the cheap way can cost you heavily in FEMA penalties. If you are a founder looking to set up a Delaware entity and want to ensure your Indian compliance is bulletproof, don't leave it to chance. At Just Start, we specialize in this exact LLP to C-Corp bridge. We handle the Indian LLP, the Delaware filings, and most importantly, the AD Bank coordination for your Form FC. Click the link in the description to book a one-to-one structural audit with my team. Let's make sure your global dream does not get stuck in the legal nightmare. Like this video if it helped, and I will see you in the next one.